Hi, Bitcoin structure has finally changed. After more than 6 months, it has made its first higher high than the previous one. That means that the probabilities shift to upside than to the continuation to the downside. In my previous videos, I mentioned that I was watching for 48.7k. And while the price is making lower highs and lower lows, we are watching for those 48.7k. But after that video, at this low, we had bullish news from the Fed. They cut rates by 50 basis points. That is extremely bullish for the markets. But I want to warn you that this drop here on the 5th of August was fear of recession. That maybe even those 50 basis points right now that are bullish, maybe after this pump to the upside can be bearish if a recession hits. But my primary scenario is right now that 70k, then 72k, and then all-time high at 73k will be taken out, and that the price will probably go to 76k before retracing to the downside. On those levels, there will be at least $32 billion worth of liquidations. If the price reaches 70k, there will be a chain reaction of liquidations and a short squeeze from 70k to at least 73k and maybe higher to 76k. I will show you the liquidation heat map that is showing me how many liquidations are there at those levels, and I will show you Bitcoin chart and how do I see it playing out right now. All of those who were watching my videos when Bitcoin was at 69k, where I predicted the drop to 48.7k, my 48.7k wasn't hit exactly. It was missed on some exchanges by only $300. For Bitcoin, it's nothing. But for example, if you placed a buy order at 48.7, it wasn't hit. But I mentioned a possibility of a short trade from 69k to 48.7k with a stop loss at 73k. If you didn't take profits at those 49k and you didn't take profits at the recent low of 52k, right now you should consider getting out at a small profit or even a break-even price at 69k, because your stop loss at 73k is in danger. If the liquidation chain of events happens 70k, 72k, 73k. If you want a person who is not messing with your mind with those kinds of videos that you have 3 hours left, that you will lose 99%, that it's your last chance to buy, it's never your last chance to buy. You should subscribe to my channel. I'm here to strengthen your mindset and to show you quality trades and predictions where I wait for those predictions to come true. I won't change my mind easily. Unless something like this, for example on Bitcoin, has happened. A structure changed. Let's jump to the chart and I will show you what I mean. We are now seeing price movements in the last 6.5 months. Consistent lower highs and lower lows. This is the first higher low and higher high that has been made. Here we had a Fed meeting and cutting rates by 50 basis points. And it resulted in the bullish sentiment in the market. And you can see here a yellow descending trend channel that I placed in the last video. This trend channel was broken to the upside, but it was relevant because you can see that the price bounced exactly at the middle point of the trend channel. I will right now remove this trend channel from the chart because at the moment they are not relevant anymore. But don't forget that this trend channel here and this upper trend line can be relevant if the price starts dropping down, because it can be used as support. Now when the chart is cleared, I will place a green trend line to the recent price action. The first indication that the trend is changing and that the price is probably falling to the downside is if this trend line is broken. because it's right now keeping the price up. How I see this recent price action from the low to the recent high? I see it as a big ABC. ABC in A, ABC in B, and probably ABC in C, or a 5A move in C, it doesn't matter, but this can be considered as wave C. Now the ideal target for wave C is 1.38 extension of wave A. So we will use Fibonacci extensions from the beginning of 49k to this lower high and to the recent low of 52k. You can see that the 1.38 extension is at 76k, but the minimum target for wave C is 1-to-1 ratio of wave A. It's 69k, and from an Elliot point of view it would be okay. But if it breaks 49k and goes to 76k, I'm sure that it will jump through this area of 70k, 72k and 73k. Why? I will show you a chart that is called liquidation heatmap. This is showing practically where majority of the liquidations are placed for leverage traders. And all of those leverage traders that shorted the market at some point, those liquidations are located at 70k and 72k. That means if the price goes to 70k and hits this area, all of those short traders that were using leverage will get liquidated. That means that there will be $16 billion of liquidations at 70k, and at 72k there will be at least $16 billion of liquidations. So in total, minimum of $32 billion of liquidations. Why do I consider that if 70k is hit, that the price will jump to 72 and then 73? Because all of those people who get liquidated will go long trying to get back their money. That will mean that a short squeeze will happen. So many longs will be opened, the price will move higher, then the liquidations of 72k will happen, they will go long, they will move the price upwards, then it will liquidate all of the other traders that the liquidations is at 73k, and then it will reach probably 76k in a blink of an eye. That's why 70k and this previous high is so important. If it doesn't turn around at 69k and touches 70k, I'm pretty sure that we will see 76k. Not only from that, but 76k, you can see that it's located right beneath the upper trend line of the bigger trend channel that has formed from the beginning of the bear market low of 15k. That would be an ideal target for the price to reach for example wave 1, that will consist of an ABC. If this is a wave 1, we will expect a wave 2 to the downside, or for new lows. This retracement to the downside will be a stress test for the price, because the price needs to hold a higher low than this low. If it breaks this low, then we are looking at those 48.7k. If it keeps a higher low, then we are looking at an ending diagonal in wave 5 of this bull market, and wave 5 to reach $100,000 in an extremely choppy manner. 3 waves in wave 1, 3 waves in wave 2, 3 waves in wave 3, 3 waves in wave 4 and 3 waves in wave 5, ending diagonal to 100k, and the upper trend line won't ever be broken at this point of time, because wave 5 won't break it. After that we can expect a bear market. In conclusion, there's high probability of mass liquidations and chain of events happening. 70k, 72k, 73k and then 76k. After that, we are looking for retracement down. That retracement needs to hold a higher low to push the price higher. If it doesn't do that, there's a higher probability of another low lower than 49k. Don't forget, if you like the video and the information that I provide, please like, share and subscribe and hit the notification bell so that you get these updates as soon as possible. And see you in the next video. Like always, bye bye.